Hello, everybody, and good afternoon from the East Coast. My name is Brooks Watson. I'm a student analyst here at the Beck Center working with the Fair Finance team. I want to thank you all for joining us today for what promises to be another important and engaging conversation. First, I want to thank Georgetown University and our partner for this event, Common Future, excuse me. And now I'd like to take the time to introduce our moderator for this event, Erica Seth Davies. Erica.
But thank you so much, Brooks, for the introduction. And I want to thank all of our panelists for being here and all the participants who have joined us for this conversation today. We are moving into the second webinar in our series, Hiding in Plain Sight, that's looking at the asset management industry through a racial equity lens. And so we know that this industry is a complex one, and the forces that have allowed it to remain largely white and male for so long are various. Poor hiring and recruiting practices, lack of media attention on this issue, lack of clear data, and dismissing the performance of diverse-owned asset management firms all contribute to the maintenance and actually reinforcing the status quo. But what we're seeing now in this moment during the movement for Black Lives is a lot of statements condemning racism and supporting Black lives. One might actually start to wonder, have we reached a turning point in the, generally speaking in society, but in the asset management industry in particular? And folks might also wonder, what would true commitment to racial equity and justice look like, particularly in a sector that has largely been closed and actually historically harmful to Black communities. So beyond reading and listening, what are some of the essential elements to shift from transactional relationships and understanding of this to more transformational change within firms and within the sector as a whole? And what are the demands of the urgency of this moment? So we are taking a look at some of those questions and have a great panel lined up to take us through some of those questions and hopefully arrive at some recommendations for the industry and other firms. But before we turn to the panel, I just want to back up a little bit and frame what we mean by talking about systemic racism, which is a phrase that's been circulated a lot. And so everybody's now condemning racism, but I want to make sure that we're operating from a space of shared understanding of the term. And I most appreciate the definition from Dr. Kamara Jones. And she says that racism is a system of structuring opportunity and assigning value based on the social interpretation of how one looks, which is what we call race, that unfairly disadvantages some individuals and communities, unfairly advantages other individuals and communities, and saps the strength of the whole society through the waste of human resources. And so I appreciate that definition, because again, it looks at racism as a system, and that just demands of us that we look at it systemically in terms of policy and practice and the things that we have normed within society, and gives us an opportunity to unpack and interrogate those things to dismantle that system. And so in a previous webinar that held that same frame, we addressed some of the key components for change, like taking an ecosystem approach. So again, looking at the different players in the system and what they might do, thinking about policy and how an intentional policy within institutions and public policy can be used to address and dismantle these systems that have created barriers, recognizing that policy is what made racism structural. That's what we'll have to address as well to again, dismantle the system. The use of data and metrics for accountability. If we don't have a baseline, if we don't have a sense of where we want to go with some of these issues, then we won't be able to measure progress or measure change or hold ourselves and others accountable for that change. And finally, we talked a little bit about shifting the narrative, thinking about risk and reframing risk, thinking about fiduciary responsibility through a different lens, and understanding that when we're talking about these issues, again, we are looking at how targeted interventions can benefit society as a whole, the financial services sector and industry as a whole, when we are more inclusive and more intentional about who has access to grow. we, in the blog post that I've shared, have also talked a little bit about the interpersonal nature of racism, how very often systems are replicated through relationships, social relationships, especially in this industry, which is so relationship driven, who different players interact with, where people spend their time, and determine if and how they're going to seek out diversity. So all of these things are coming together for our conversation today, when we are, again, looking at a time when statements and name changes and folks taking knees all over the place. How do we actually ensure that there is real change to the systems that have caused harm, that have been inaccessible, and how do we begin to remove the barriers and transform opportunity? So I am so pleased to have this incredibly talented panel today. So I will just introduce our panelists and then allow each of them to talk a little bit about their role and what their work is within their respective firms. So I'll start with Angela Matheny, who is the Director of Investment Staff and Diverse Manager Equity at Colonial Consulting. We have with us also Rob Young, Managing Director and Head of Marketing and Client Service at Brown Capital Management, which is the second oldest Black-owned investment management country. I say in the country, but it's in the world. And Tiffany McGee, who is the CEO and co-CIO of Institutional Investment Services at Momentum Advisors. So I will start with Angela. If you could share just a bit about your firm and the role that you play within Colonial.
Thank you, Erica. Thank you for this very important and much needed discussion. Unfortunately, we're having the same discussion, but my role started out as a goal to build a pipeline of diverse women and people found on an ownership level. We believe that those ideas are getting in there, and the diversity of thought and the diversification of a team that looks diverse actually promotes what we all agree with, which is better outcomes. And so today, Colonial can stand no more. So we have been proactively taking this approach, undergoing all that is necessary to implement a name change since last year. And so very soon we will make that announcement. Very soon we plan to publicly share, as we have with DAMI and other organizations in which we partner with to find the talent that we know is out there. We're going to publicize a lot of data. We've always, we've been transparent since I've been in this role. And I think it was really just a matter of having someone focus on this issue and the challenges full time. And that's me, reporting and really increasing our pipeline by having Mike Miller, our CIO, look at every single opportunity that I have brought to the firm, increasing exponentially the amount of diverse manager meetings that we have, and the outcome of that is actually getting more access to diverse managers and getting them a seat at the table. And so I'm sort of like, I'm reminding myself of John Lewis, not that I'm comparing myself to him, but I want to say that I am the conscious of the investment team. And I do, it is very important for us to have diversity of thought by way of having a diverse investment team and leaders at the table who are 100% on board with the initiative. We want to appreciate everything and respect everyone and give them the time that they deserve in order to be a part of our process, and finally to write that check.
Thank you. Tiffany, can you just tell us a little bit about you, your role, and Momentum Advisors?
Sure. So thank you, Erica, for putting this together. I'm a huge fan of your continued work. I'm a huge fan of Angela at Colonial and everything that she's doing. She's really being a bit modest. She is a gladiator for diverse owned asset managers, and we need the Angelas of the world. So I'm just happy to be on a panel with her. And Rob, I'm going to brag about you and Brown Capital later on in this conversation, but I'm happy to be on this panel with you guys. And so my name is Tiffany McGee. I'm a co-founder of Momentum Advisors. I founded the firm's institutional investment services practice. We are a diverse-owned investment advisory firm. You don't really see a lot of that on the institutional side. So we are one of the few. I'm searching for others because we don't want to be in this situation alone. So, we manage portfolios for foundations, endowments, do some work with pensions and also family offices. I oversee all of institutional investment services. What my job looks like on day-to-day is managing relationships with clients, talking to clients, managing client portfolios. Also, due diligence across all asset classes for managers. That's like 40 Act mutual funds and ETFs, as well as alternative investments. That's also picking individual stocks. We'll talk a little bit more about that a little bit later. But we've been really intentional. There's so much research out there that everybody on this panel I know is aware of, and certainly in the audience, I'm sure most of you are aware of, about diversity, about ESG. We really believe that you can't have a conversation about ESG if you're not talking about diversity, because that is a part of that G. We really believe that right now we're in the Super Bowl of ESG with all of the flows going into ESG in the first quarter and also second quarter, and all of the outperformance. So we're really happy to talk about this. I know we're going to get into a very, really cool discussion, but we think that we're uniquely positioned because, all the research out there shows that there is bias with allocators, and it's a problem. And so, we believe that we need more firms like us that are diverse owned, that don't have that particular bias to Black and brown asset managers, because we just don't, because we are them. We started our firm, we're entrepreneurs. A lot of them are entrepreneurs, so we understand their struggle. We understand what it is to leave a big firm and be successful, and then start your own thing and have people say, oh, why did you leave? Was there a problem? Or, oh, was your success at that firm because you were with that firm? Or was it really your talent? So we, our number one focus is to our clients and, generating alpha and minimizing risk and keeping fees low. But we also have a particular understanding of what an asset manager goes through, in particular, a diverse owned asset manager goes through in terms of raising capital.
Thank you. Okay, Rob, so you come at this from a very different perspective, being at Brown Capital. And so talk a little bit about the firm. It's 37 years, I keep saying that, and the importance of that, yeah.
Sure, thanks, Eric. And I'm honored to be here with all of you. I must say that I'm a fan of Erica's work, not just here, but outside of here, and its many capacities. And then Angela, know not just of you because of your work, but certainly you have partnered mightily with Brown Capital Management, which we greatly appreciate and are thankful for. I feel badly since I've assigned one of my colleagues to you that I know calls you every day, so I apologize for such things. And Tiffany, we had a chance to meet relatively recently, and I admire your story and what it took to really go out there on your own. So, I'm not sure that I have a profile that matches anybody here, but I will certainly share what I can on behalf of Brown Capital, and that's probably the most important element of it. I'm responsible for distribution. My client-facing duties still exist, but I've been there now for 20 years, so it's hard to think that I've been at a place for 20 of the 37 years in existence, and it's most know Eddie is a trailblazer and pioneer in the business. Angela, which means we won't be changing our name anytime soon. I think we want to hold on to that as long as we can. But we're a firm that really manages 5 strategies, both institutionally focused as well as private wealth. Really we've done it, as Erica said, for 37 years, and really been diligent, very conservative, under the radar in our pursuits. Any of you who know Eddie know that he's a very traditional, soft-spoken guy who's very intentional in his work. And in that regard, he has been very diligent, and he has found a way between persistence and grit to really arrive at, $14 billion over, this 37-year journey. One of the questions we've been asked very recently is, do you feel as a minority firm, that $14 billion would be something more if you were a majority firm. We have rarely answered that question frankly, for fear of what the consequences have been, but more recently have really come out openly and said, yes, we do believe that because of the topic that we're discussing today. So we are certainly, we're a proud firm. We've experienced things, being on this side of the equation that I certainly admit, after spending about 7 years at T. Rowe Price and having a wonderful introduction to the business and understanding and learning about how it's done, was very different at Brown Capital. Not just because we weren't a behemoth. I mean, that's part of it, but we are different. We're a boutique. We look different. And Tiffany's already alluded to, really what it takes to go out there on your own. And you're evaluated. Your risk profile is certainly assessed differently. So we certainly found our way to success. There's more of it out there, we believe. And, really appreciate the opportunity to sit here and discuss the complexities of the subject matter with all of you.
Okay, thank you. So we're just going to go ahead and jump right in this moment. You highlighted something there, Rob, about how big Brown could be if it looked a little different, if there was a longer track record even. And so as I've been doing this work, I always talk about the things that we just accept as normal that actually continue to confer advantage and disadvantage in the space. And so, Angela, I'm going to direct this question to you, and actually, Tiffany, you can weigh in on this as well. When we're looking at literally the second oldest Black-owned investment management firm in the world at 37 years, and how that stacks up to, against firms that have been around for decades, right? In even a century. When we look at things like track record or AUM, these criteria that screen out so many, the majority of diverse firms. One, what was it that your firms, respective firms, had to do to navigate that, right? Like to come up with a different formula, if you will, not sharing any trade secrets, but what was the case, if you had to make the case, or how did you get past what is just seen as an absolute essential, like, oh, well, this is us doing our fiduciary responsibility, track record really matters, AUM really matters, but these are the same things that are keeping these firms out of competition. What did you have to do to move that, Angela, within a firm that was traditionally not looking in this direction, even though it was, favoring smaller managers? And Tiffany, as you develop your approach and beyond the natural networks that you talked about, how did you bring that into helping your clients even understand why some of these things are creating false barriers?
So my vantage point is really different because it's unique, and it's unique because my background is not like most individuals that we come across in this industry as having studied finance or been at a financial services firm. I mean, when I was at the law firm, I was helping with fund document creation. So I was working with a lot of GPs who they refer to as what I know now actually as emerging managers. But I really didn't know about the systematic and structural things that actually impeded the success of women and diverse owned firms. And so when I came on board to Colonial, sometimes it's great in terms of adding diversity of thought. Sometimes it's a good idea to actually have someone come from the outside and look in, because maybe that lack of knowledge, maybe sometimes the team knows too much and they're accustomed to doing more of the same. They're accustomed to trekking in the same networks. I came on board willing to just be a sponge, learn everything about everything. But one thing I wasn't new to was a lot of the structural issues that we see today, that the protests of George Floyd and many other deaths that we know about in my community, in our community, that's not strange to us. That's not strange. Even when we look at the social components in terms of education and poverty, that's not strange to me. So my deep background in diversity and inclusion, and just looking at fairness and just looking at an individual, and if you see that they lack something in a certain area, and I'm thinking about my interns now, that's a reason to give them the opportunity. In terms of me being additive to the team, I just came to them with everything and said, what about this and what about that? And tell me why. And I don't want the vanilla answer. I don't want the stock answer, because then I began to track and just dig deep in terms of, well, what's really, really impeding the success of diverse managers, and what can we do as a quite small player in the system when you measure up, measure us to maybe the Cambridges of the world. But we do have a healthy dose of nonprofits, community foundations, whose missions and values actually align with the communities that they serve. You have donors that walk in with millions of dollars, donating to that community foundation. And what do they want? What are they looking for? So I think it's, everyone, there's so many stakeholders, in the ecosystem that can just raise their voice and say, I want, something different. I want something unique. And why aren't you looking here? But to go way back for a second to 2013, a client approached us, quite frankly, and they said, how many diverse managers are there in our portfolio? At that time, we weren't really tracking. There were maybe one or two. And then another really great question was, how many are there across your client base? Can you find us those managers? First of all, report on what we already have, but then we want you to do better. And we realized that we weren't doing anything right. And so when I came on board in 2017 of January, I did a simple Google search. My search said manager diversity, and I found NAST, I found NAIC, and then NAIC introduced me to Dami and Robert Rabin. My CIO and I, we got on a plane and we went to DC, and we had an in-person meeting with Robert Rabin. And he, man, if I were a male, I would be Robert Rabin, because he was the most candid, and still is the most candid person. I need to see results. I need to see change in my lifetime. Tiffany always laughs at me when I say that. But I'm a results-oriented person. I like to mitigate issues, but I also like to solve issues, and I like to address the elephant in the room, and I like to get at the problem and uncover the things that are, again, impeding a success. And so I've done that with our team. I've had very candid conversations with leadership, particularly our CIO, and they've just embraced all of these things. And when we started finding these managers, everyone was like, oh my God, this is just amazing. This is not complicated. If it took a Black woman to go into these rooms and just feel comfortable networking with my own people, that was easy for me. But then I came back with these inquiries to the firm, and I said, I really want to see what you're going to do. What are we going to do now? And I want to understand, why is someone, what's a non-starter? Why are we approving this person if we're approving them? And why are we walking away if they're not aligned with our interests and what we're trying to do? I really need real answers. And I'll just stop there.
Okay, so two things that I'm going to just highlight: the data and the intention, right? Like, there's a whole lot of intention and everything that you did. Tiffany, can you talk just a bit about how Momentum Advisors started? I mean, again, it's in the DNA, as you said before, but you still have clients that you have to work with. And so, how did you bridge that gap, if there was one, if there was in fact one?
Make sure I'm not on mute. Okay, good. Yeah, so I wouldn't say there was a gap, right? So I think that, automatically when we were, starting, first of all, we've always managed portfolios. So even before Momentum, we were always managing portfolios at client portfolios at different firms, and you get to learn managers, right? So and by the way, I also live not too far from probably maybe about 20 minutes from Brown Capital Management. So if you live in Baltimore, you know Eddie Brown, unless you're living under a rock someplace. So we definitely knew managers, that we had managers that we were familiar with. So once we really realized that really building out this due diligence team and responsibilities and what that looked like as we grew and as we started to take on bigger clients, in particular around, I would say 2018, all of the conversation in every, investment room, on TV, everything, because the market, we're talking about a market being up over 209%, for, one of the largest bull markets of all times. And it's like, well, when is that going to change, right? And how do you position your how do you position portfolios going forward? And so everybody was talking about uncorrelated assets, right? So what can we pull into a portfolio that's not correlated with stocks and bonds that will kind of buffer that turn whenever that turn's going to be? And so I started looking for a crystal ball. And so if I really had a crystal ball, I probably wouldn't be here talking to you guys right now. But I started looking at, well, what tools do I have to kind of figure out how to position client portfolios to buffer this turn, because what goes up must come down eventually, right? And so a couple things, and I kind of identified them, did my research, identified them, and I put them into what I call the next generation of alpha identifiers. And so what that is diverse owned asset managers, ESG, emerging markets, and first time funds. And so a lot of those things are actually kind of intertwined. And so, I started to look at those things. And so all the research, again, says that these diverse managers outperform, diverse owned asset managers outperform. ESG strategies tend to outperform, right? ESG is not socially conscious investing. And really what it is taking those responsible environmental, social, and governance metrics and lining them up alongside the traditional financial metrics that we use to evaluate a company, a strategy, and making a sound decision, right? And so those responsible metrics tend to lead to the identification of sound management, and sound management tends to have ultimately better returns, right? Very simple. So again, at the end of the day, my number one goal to my clients is to generate alpha. Number two is to minimize risk. And actually 1, 2, and 3, all are really number one: generate alpha, minimize risk, and be fee conscious. And so if all the research is showing that these diverse owned asset managers outperform, why aren't the floodgates opening up and people, consultants, everybody, allocators running to them? And so you bring up a good point, Erica, about track record. So a lot of allocators have this very rigid criteria about, regarding who they're going to allocate to, right? And surrounding track record, right? And really SEC technical track record, right? So you have to have this fund for X amount of years, whatever your criteria is. And also AUM. So you have to have at least, 80 million in assets under management, what have you. And so I started to think about this and really the profile of these diverse owned managers, right? Who I now know outperform. And a lot of them, again, tend to be entrepreneurs. A lot of them, some of them are first time funds or second time funds. And I really started to think about this. And so, again, we didn't have a rigid process because we are more of a boutique firm. We can make decisions and be very, very nimble, really quickly. And so, our process, I really started focusing on our process. And so we consider what I like to call an alternative track record. So I'm never going to, we as a firm are never going to invest in someone who, has worked at Target for the past 15 years and all of a sudden wakes up and says, hey, I'm going to start a fund. No. But what we will invest in, what we're very interested in, is someone who has possibly been in another firm, has a history of really knowing how to invest, of learning how to invest. And maybe they weren't the person ultimately pulling the trigger in terms of investment decisions at their previous firm, but they were able to sit there and listen and pay attention to what worked and what didn't work. And so I kind of call this like my Jay-Z kind of manifesto, right? I'm a huge Jay-Z fan, right? You guys thought you were tuning into D&I, but now we're certainly taking
we're in hip hop. Okay.
So I'm a huge Jay-Z fan. And so how Jay-Z fits into all this is Reasonable Doubt is arguably his best album, right? It's his first album. And this is how I think about first-time funds, because those, which a lot of times, it's all in the same conversation of diverse owned funds. These, people are sitting in someone else's box. Mm-hmm. They have all this experience. And when they get the opportunity to start their own fund, now they know what works, what doesn't work, and these are their best ideas. And I want someone's best ideas, whether it's your first best idea or your second best idea. I want Reasonable Doubt. I don't want Blueprint 2, right? That's like his third or fourth album. So we have a model that considers alternative track records. We really do a ton of due diligence to figure out how someone learned how to invest. and really kind of figure out who they are and what they're about and their talent before they started this fund. Yeah, and that's kind of, it really is a different way of thinking. And we do that because we have so much in common with a lot of these managers.
Okay. Rob, so we're going to switch to what that then feels like as a firm, right? Like this diverse owned firm. So you've been at this for 20 years at Brown Capital, came out of T. Rowe. So you know the difference of how your firm is treated and what the interaction is and what that feels like. So when do you know, or what are the signals of when this is actually either in the DNA or firms like Colonial are moving with intention on these issues, and how does that show up for your firm? I'm going to add a second question about what that means in terms of the growth, but go ahead and just talk about that a little bit for how that shows up for you.
Sure, and I'll disclose in advance, certainly being in distribution, there's certainly factors that influence that, but the work that we do could always be better, right? We can always be reaching out more, engaging better. There's always those factors. But, certainly predating me, I remember that the stories discussed about, Eddie engaging the consulting community for the first time and saying that, I have a product, I have an offering, and then all the typical criteria was laid out in front of him and said, once you have this criteria, especially a 5-year track record, come back and talk to us. And to make a long story short, it was, okay, when you have a 10-year track record, right? So there's always this sense that the ball is moving ahead, right? There's something that continues to get ahead of you. We've had, I'd say, in fairness, one of the top performing small cap growth offerings, in the country for the better part of the last decade, or frankly, the past 2 decades. There's been the ongoing and repeated question, why are we not found? And we've heard countless excuses for that. I mean, I think some goes back to, we didn't see you in the databases, even though we populated databases. We didn't know about your firm. You didn't screen by assets, or, we didn't know you as a minority firm because you had too many assets, which is interesting, or you didn't qualify, or you didn't register as a minority firm. And we don't register as a minority firm in the state of Maryland because we generate too much revenue. And so, they're all the myriad rules that you kind of engage and deal with that kind of create this complex, this maze that makes it very difficult to navigate your visibility. Eric, you said earlier, there's this normalcy, a societal component to this that is personal, and what, people have to be familiar with you. People aren't familiar with our firm. They weren't familiar with, especially we certainly could do better with, I think our gender diversity, but they weren't familiar when, our firm would show up and you have, 3 or 4 Black males entering the room. There was often a visceral response. And I would argue that the professionals of Brown Capital, certainly excluding myself, have degrees from some of the best schools in the country. They are beyond competent. They are beyond capable. We don't hire typically the newly minted MBA. We find folks that have incredible experience. And these are people that are very capable of doing their jobs. They've not only been at Brown Capital, they've been places before that, and some have gone on and done incredible things after. So we have kind of accepted the fact that when we enter searches, as much as, we like to be as focused as we possibly can, be thoughtful. I love all the criteria that Tiffany mentioned. The fee part, I'm going to ignore for a second because that's one thing we don't necessarily do as well. But we expect to not make it through certain searches, even if we are categorically the best manager, because we understand there's some that just won't be comfortable with our business model, the investment program, our approach, which is a little bit unorthodox, or sometimes just the people entering the room. If you're a consultant, you have to make, oftentimes, your reputation is at stake. You're making a judgment call. And sometimes folks are comfortable with that judgment call, sometimes they're not. So, I listen to Angela and what she's described in terms of how she goes to bat, asking the question, tell me why not? Because it takes someone to enter the room and have that conversation, and an honest conversation. And it's a difficult conversation. These are difficult conversations we're having countrywide, or starting to have countrywide. And I certainly hope they persist as to, what makes you uncomfortable? Why can't you make this decision? And from that, I think will certainly yield greater opportunities for, certainly small boutique firms, minority firms, et cetera.
Sure.
Erica, can I just say a quick thing about
Yeah.
Brown? He mentioned the word unorthodox, and that's a terminology that we love to appreciate. We're contrarian investors, so we love unique managers. But one thing I want to say I love is that problem. If I had more assets to manage, I could compete, right? So low AUM is not the issue for us. And it goes back to, I love everything that Tiffany said, because she actually just described our process in terms of how we diligence managers. But low AUM is not a problem. We're looking at pedigree in terms of where did you cut your teeth at a prior firm. And in terms of Brown, I just have to really make this plug. They are phenomenal. I was looking at their domestic product, their US small cap product. And I remember being at one of my first diverse manager conferences, and I approached Keith Lee and I said, can we have more of that, basically? And he said, and I knew it had been closed for many years, but I wanted to be online because we were waiting for that vehicle to open up again. And we wanted to be one of the individuals, advisory firms to get that call. But when they launched the international small cap companies vehicle, we were just blown away in terms of their performance. And I want to end with this. They saved us. They literally saved us last quarter. We're on investment team calls every single day. And when we look at their performance and what we were able to accomplish for our clients, Brown literally saved the day last quarter. And we want to continue to find more of Brown's. We're not concerned about their AUM. We're not concerned that, most of the team is Brown. We're concerned about how you're investing, how you're achieving those returns. And we're really concerned about the unique opportunities that they are finding. And when you compare them to other individuals or other funds that we allocate to, they truly look at unique companies. And that's the thing that we appreciate.
So everybody's talked about something, and one of the questions from participants addresses this as well. But everybody's talked about where you cut your teeth, where you were developed. Tiffany and Rob, you all came out of larger white, predominantly white shops to do what you're doing now. I actually worked briefly for a firm that came out of Brown Capital, right? So where you start and where you go really matters. And so one of the questions that has come up is like, what needs to happen to retain more Black talent in the asset management industry? And I would suggest, what is lost if we don't have more Brown capital management firms? And so we've seen the closing of a number of firms in the last few years. So what's the opportunity that we miss? But then also, how do we ensure that we're retaining Black talent, either in diverse owned firms and or in some of the majority firms? Rob, we'll start with that.
Why don't I start? As for the retention of talent, I'll have a shorter response. I don't think there in many places. I say I can only speak for Brown Capital Management. I know that my time at T. Rowe Price was exceptional, and for me, it was an opportunity to really spread my wings and be at a more entrepreneurial shop. Really thought that my skills had developed to the point that, and certainly was trained well enough that I thought, let's see if you can do this outside of, a large organization that certainly does a lot of supporting and buttressing of the skill set. So starting at Brown Capital was that opportunity for me, and frankly, did it at an age where, if things did not go well, I was hoping that whether it was T. Rowe Price or somewhere else, I could find my way back into, perhaps a more secure situation. So I can't speak to retention there, but I know at Brown Capital, retention is critically important. And part of that, frankly, gets down to ownership. And it's how do you think about the future? What is your vision for that future? And really, are you developing the professionals within the firm to capitalize and meet their overall potential? And when you're a boutique and you're small, that's something you don't think about every day, I think, but increasingly you want to retain these really, really talented people. That has to be part of your thought process. And that ties directly into the same issue that occurs when you start losing firms or firms that are minority-owned firms that begin to close. There's an incredible opportunity set out there, people that view the world a little bit differently, whether it's using an unorthodox investment approach to the investment program, whether simply how you engage or see the world, there's an opportunity for alpha there. And as Tiffany's mentioned, there are studies ad nauseum that describe the outperformance that certainly minority firms and boutique firms can provide. If these firms close, you miss out on that, and you become more likely to be part of the herd. The herd certainly is, more likely to find their way toward the mean as opposed to be alpha generating, which frankly, whether it's foundations, endowments, pensions, alpha generation is needed everywhere. And certainly one of our hallmarks and one of the things we recognize will only keep us relevant is if we're able to maintain that alpha. And Angela, 1,000 basis points probably is not the expectation I want to set anytime soon, but I'm glad we contributed last quarter.
Thanks. Tiffany, anything about retention in the industry?
Sure. And I'll just level set. So, really to speak about Brown, and I actually pulled this up as we started talking because we do invest in the International Small Company. I tried to get into the small cap. I literally was like begging and pleading and phoning friends. And the calls that I made. So, okay, I guess you guys like Angela better than me, but that's fine. But just to speak about the International Small Company, in the past 3 months, it's done 31.37%, right? The MSCI All World, 22.98%. Year to date, the MSCI All World is down 12.61%. Eddie Brown's fund is up 8.77%. So that's what we're missing out if we're not retaining Black talent at these firms. And what we're missing out in is performance. Oh, go ahead.
No, I'm sorry. I thought you were done.
No, I'm not done. So we're definitely missing out on performance. And I think, yes, we all started someplace. One thing that was really helpful to me is really tapping into a network, really traveling and finding my tribe. I was relentless about finding people that did something similar to me and finding a tribe because, it can get very, very lonely. But there is a network. Like we are all a part of a network. We all, this is not our first time all talking, right? And so there are so many different organizations that pull us together. Angela mentioned a few of them: NAIC, NASP. There's also New American Alliance. There's Twigo Foundation, and there's alumni associations from some of these schools. But it is really plugging into that network and finding your tribe. And one of the things I did as we were growing momentum, I really was, I physically am in Baltimore, but I knew that, and we're based in New York, that New York was for me, was like the center of everything. So I made sure I was there every other week, or at least every week. And I just had conversations. I didn't do any meetings in offices. I did lunch, I did breakfast, I did, dinner. I did all of these things to have authentic connections with people. And it was like a 3-year process of just getting to know people. Tell me about yourself. How do you guys make your money? And it was the same thing. And that, all this stuff that's happening with momentum right now, and I really feel like we're having a good moment, is really because of those seeds that I sowed. It's not because of anything else.
Okay. So as you all are developing this work, and let's be clear, I know there's a lot of demand that's all of a sudden popping up, right, in recent months. But one, do you think it's going to stick? Is this something as people get increasingly exposed to the Brown Capitals of the world and recognize, wait, we've actually been doing a disservice to our own performance by not being intentional about this? What kind of client demand are you seeing at this moment and leading up to this moment? Because the question then becomes, how do we get more people thinking this way? How do we get more people actually shifting their approach? Angela, you were cutting in and out earlier, but I think everybody heard the part where you said Colonial will be changing its name, right? And so you couldn't walk in 2017 and say, this is problematic, although I'm sure it occurred to you, this is problematic.
I did. Everybody knows me, I did.
So, you know, years later, a few years later, and it's actually happening, right? So that takes work. That actually takes work within the firm having those hard conversations. But how do we shift more more gatekeeping roles and asset allocators so that they are being more intentional about this? So that's one question. And how are your clients, or what is the client community demanding at this point? And then how do we take advantage of that right now?
We should all be taking advantage of this moment as we're all sitting at home watching the news, seeing what's happening, which has really happened historically in this country, the ugly history of America. Some people are ashamed, and some people just want to know more. Some people, they actually need more education. Um, Rob mentioned the research that's out there. I mean, it's a simple Google search at this point, but I'm happy to share resources with anyone. Tiffany said so many things. She reminded me of so many things that we're doing. I mean, we're connected with SEO. We have a special breakfast that we put on for diverse asset managers, which Brown also has participated in every quarter. And one other thought before I answer your question that I want to say is that you have to have your finger on the pulse all the time, because Brown U.S. Strategy actually predates me. But someone looking at exposure and saying, oh my God, this is great, and why don't we have more of it? And then I realized close and we have to get in line, say that we're very interested in more. A person approached me and said, Angela, why don't we have more exposure from Colonial's clients? And I took a look. I was already conducting a study on this, but you have to look across your client base, particularly your diverse manager pipeline, to see who is, we talking about public market, who is open to more capital? Who are we going to re-up on because they've done so greatly, so great in terms of their performance if we're talking about private equity? And that's what we did with going back to Garcia. I asked the question. We're always talking about Garcia. He's the best in the space in fixed income. And so why aren't there more allocations flowing to him? And what we found was that they had separately managed accounts. And I wanted to know, well, have you ever tried to create a fund? Well, we need a certain commitment in order to create the fund. Okay, what's that number? So we got everyone at the table at Colonial, and it was a simple question. So I bring this up to say that I'm not saying that there's not racism. I'm not saying that there's not things that we need to work on, especially diversifying the investment committees of our clients, of many institutions around this world. What I am saying is that sometimes it's a simple conversation. It's a simple question. It's aligning yourself with someone who you feel like Tiffany said you can approach, because you've been in all these rooms, you've been at all the networking sessions, and you've built relationships. And finally, Stephanie Roberts, she approached me and she was comfortable enough to ask me what would probably be a hard question for some. And I went back with this information, looked at my reporting, had a meeting with our investment team, first our CIO, and then all of a sudden, it was like I don't know, rain. It was raining money. I mean, there was so many allocations flowing to Garcia. Once we made the commitment, got our lawyers involved, did what we had to do. And that's one of the success stories that I always like to share, because it's not always racism. It's not always policy. It's turning to your GP, your managers, and say, what do you need from us? Or having someone to recognize an issue. Now I forgot your question because I'm on a tangent, because these things just really blow my mind. It was very simple.
The question was about demand.
Yeah. Okay, so what I'm seeing really
There's a client demand.
Is a lot of our clients are actually approaching me. My inbox is blowing up because, again, we're all sitting home and everybody's paying attention. So everyone wants to know what's their exposure to diverse managers. Just this morning, I had a client reach out to say, how many Black managers specifically are in your pipeline? And so I looked at how much we were allocating to the firms that we have, that we've approved in our process. And I gave that number. And this is the San Francisco Community Foundation, who is a huge champion of diversity. They actually have their stats every year, and annually they update their stats on their website. And so what firms like nonprofits like that, I love about them is that they are transparent, they are sharing best practices, and hopefully someone will navigate to their website and say, how did you do that? And one final thing I'll say is that we are also, just this week, I've gotten 2 inquiries, or someone on my team, about investment policy statements and how can we make manager diversity sustainable. What do we need to do? How are others doing that? And can you help us with this?
Tiffany, how are you seeing this showing up for clients?
Yeah, absolutely. So Angela makes some great points. It's hard to follow that. So yes, I think clients are interested. So let me just take a quick step back, because I know we're running out of time. But before, all of the events of 2020, we weren't ever really going to clients and saying, we've got this great Black manager. Like, that's setting people up for failure. We've got discretion over the majority of our portfolios. This is what we pick. So to Angela's point about the operations and the technicality of everything, right? So we don't have that conversation with clients. Like, oh, there's this Black fund. No. You know what? There's this small cap, there's this international small cap fund that's outperforming everything else. You guys should have it in your portfolio. Done. It's done. Right. And so that's how we moved. And now we're probably, we never hit anything, but now we're being even more vocal about it. And, we are, again, in the Super Bowl of ESG, which also encompasses diverse ownership, and particularly with asset managers, and clients are wanting this. And, as we've seen the events of the past few months, unfold, that first week, the protests started like over the weekend, and that first week, by Thursday, by Sunday night, I was looking at all of the individual stock positions in our portfolio, and looking at how much exposure, well, how many diverse people, especially in particular Black people, they had in their C-suite, on their board. I was getting fired up. By Sunday night, I was like, I don't want to own this, or this. Then I had a moment and breathed through it. But, it really speaks to like the power that we as a consulting firm, as an investment advisory firm, have. And so by Thursday, with all these companies coming out with their statements, I said, we need a Black Lives Matter statement. I know it sounds ridiculous because clearly we believe that Black Lives Matter, but I think that we need to, I wanted to use this as an opportunity to showcase what the inequalities in our industry and what people can do about it. So, it was the statement, this is, horrible. Here's what we as a firm have been doing, particularly in the institutional space, right? We've always allocated Black managers, and here's why. And we're going to double down on that commitment. And in addition to allocating to Black managers, we're also going to make sure that the managers that come to us, if they're not institutionally ready, we're going to do what we can to help them be institutionally ready. And then here's what you can do. I say this time and time again, like, Black asset managers matter, right? So hire one. Black investment advisors matter. So you can also hire us, right? And that is very simple. It really is very simple, but it's something that can be done. And we are seeing so many clients that want their investment portfolios, because the majority of our clients are nonprofits. All of our clients are nonprofits, and they want their investment portfolios to match their missions, to be aligned with their missions. So often these organizations will carve out 5% of their portfolio for, impact investing, but then the other 95% of their portfolio is undermining their values. And so there are some things that you can do within your portfolio, including hiring managers, that can really bring your portfolio in line with your values. And they are asking. I had 2 calls this morning. People are wanting this. And so I really believe that now is the time, and I'm hopeful.
Okay, so we're just about out of time. Rob, I did have one more question for you at this time, because we've had a few questions come in about, so what does it take? How do firms, folks who sit in the role that you do, are, kind of out here struggling to build AUM, and maybe even collaborate with other diverse managers to strengthen the opportunity. I mean, we see a lot of NASP, NAIC. We talked about some of these organizations and the significance of them. And just was it a week ago that there was, testifying at the SEC committee advocating for data regulation that would require data reporting on demographics in the industry. That would be huge, but it was those industry partners that were able to be positioned to do that. From where you sit, how should or how could firms be moving themselves either to seek out an Angela or a Tiffany so that they're kind of getting in front of these decision makers? What are some of the questions that you may have had to ask that got you to a different place? So can you just address that just a bit?
Another 60 seconds. So I'll just offer one quick insight from our experience, at least in my own, not just in 20 years of Brown Capital, predating that. Ask yourself the hard question, right? Ask yourself the question that you probably do not want a consultant and advisor to ask you, and be prepared for that. And frankly, if you have a friendly audience, and Angela and Tiffany have already spoken to this, ask them how you can be better in that regard. How can you help? Because oftentimes the elephant in the room is what everybody knows and nobody talks about. So until you put that in the center of the table, you can't even begin to address, coming to some kind of creative solution. And there are creative solutions out there, but oftentimes nobody wants to talk about that because the rules get in the way. And creative thought, connection, and this is a people business. I hate to sound cliche, but if you have relationships and connection to people, there's going to be trust and confidence in those relationships and a commitment to ensuring that you can deliver on the things that you say you can do.
Okay. Well, thank you so much. I know there were a few more questions that we're not even going to be able to get to because this was such a rich discussion. And I'm happy to see much more visibility on this issue. I know I've been doing this work for years at this point, enough years that to see, again, Tiffany on CNBC and to see mainstream media picking up some of the things that I've written about, to have an audience right now of people who are really plugging in and paying attention, that hopefully we have we'll turn this moment into a movement that will see continued progress on these issues, because it is important. Black asset managers matter. This is an invaluable conversation. So thank you all for being here today. Thank you for the work that you all do and the ways in which you are moving in this industry. Thank you again to Rob, Angela, and Tiffany. We appreciate all the work that you're doing again. I've got to give a shout out to Common Future, who is our partner and helped to promote the series as well. So we appreciate your great questions and your interest in the subject. I hope we'll be able to get some more questions in the future, but definitely wanted to say thank you to everyone who's joined us today, and have a great day.